Hi, and welcome to Cboe Digital TV. I'm Katherine Kirkpatrick, Chief Legal Officer of Cboe Digital, and I'm here today with Ira Weiss, who is a professor at the University of Chicago and also a partner at Hyde Park Venture Partners. Ira, thank you so much for being here today. I'd love to kick things off and just ask you more about yourself and how you got into venture capital.
Well, thank you for having me. My family comes from a history of entrepreneurs in the shoe business. That's not exactly how I got into venture capital, but my grand world plan for Ira Weiss was to go work at the World Bank or the IMF. I briefly became an accountant, got a PhD in accounting, went to teach at Columbia Business School in New York. And on the side of being a professor, it was 1999 when the tech bubble was in its bloom. And a lot of people were going off to work at startup companies, and instead I started investing in startup companies. And so I did that on the side of being a professor. I did that for 6 or 7 years, made some fintech investments that we could talk a little bit about later, ended up moving back here to Chicago, which is where I'm from, started teaching at the University of Chicago at the business school, branched off on the side and started a fund called Hyde Park Venture Partners. And so Hyde Park Venture Partners is a early stage tech investing fund that focuses primarily on the Midwest. Happy to tell you more about it later. But
I'd love to hear more about that. But first, what do you teach?
I teach accounting, entrepreneurship, tax, venture capital.
Fantastic. I don't think I was smart enough in high school to get into the University of Chicago, so it is a privilege to be here with a professor of your caliber.
Oh, well, thank you. I don't think I could have gotten in either, so certainly not at an undergraduate level.
To put you on the spot for just a moment, I heard something interesting the other day where they say, 15, 20 years ago, the premier job out of college was to go work for Goldman Sachs. And 10 years ago, it was to go work for Google. Now it's to go work in crypto. Do you have any thoughts about that? Do you agree, disagree?
I definitely have had a lot of students who have been very interested in going to work in crypto. Mostly I teach MBA students, and so I think your trajectory was right, which is like go to work at Goldman or go to work at some investment bank. For a brief period of time, it was go to work at startup tech companies. Then it was go to work for one of the big technology companies, Google or Apple or something like that. And then I think there had been a period of time when people were interested in crypto and cannabis. I think that's, to be honest, it's probably waned a little bit after what's happened in the environment, but certainly there's still a lot of interest.
I can see that impact of 2022 was quite a ride. One other question I had with your experience with MBAs is they also say this about Web3 more generally, that the traditional startup company is often an MBA with an idea, and then developers and engineers and IT, et cetera, help kind of run with that idea. And Web3 flips that on its head, where it's the developer or engineer with an idea and or concept, and the MBA helps bring that to fruition. Any thoughts on that?
I think that's true. I mean, I think you need to know it's a market where you need to know a lot more about the intricacies, and it is very technical, and even the architecture can be a little bit different. So I think there's certainly more cases, and I think there are a lot of software developers who are particularly interested in crypto markets because they're interested in the decentralization, and they're a little, some of them can be a little less certain about government and things like that. So I think there's a natural interest among developers in it.
Attracted to the ethos of crypto and decentralization and the concepts of being permissionless and DAOs and all of that fun stuff.
Exactly.
Absolutely.
And all just, the corners of the web and, doing things around the world. So
privacy and all. Yeah, I absolutely agree with you there. Well, tell me a little bit more about the kind of investments Hyde Park Venture Partners makes.
So we are investing just about to be investing out of our fourth fund. We make early stage, typically seed and very early stage investments in software technology. Some of them have been in the crypto space, but we're not. We're far from a pure crypto fund. We've done a fair bit of fintech investing, and I would say our crypto investments fall into that category more than others. Because our focus on the Midwest, we've tended to look for things where does the Midwest or the mid-cotton have an advantage. And so that happens to be, in some cases, things like the futures markets, which were built here, and or futures and commodities, which were built here in Chicago. So we've actually done a couple of crypto investment. We've done a handful. The two that I have led, one was a company that was called Cove Markets, which was a trading platform for crypto that ended up being bought by Robinhood towards the end of 2021. Probably a good time to be selling these things. And then we were actually an investor in a company called, it was called the Fair Exchange that ended up being bought by Coinbase. And so I was also involved in that investment as well.
I have heard kind of anecdotally or seen in the venture market that you're seeing a lot of funding go to things like crypto infrastructure as opposed to crypto finance. Do you have any thoughts there? Or what is attractive to a venture investor in fintech and crypto right now?
Yeah, I mean, I'll generalize a little bit more. Like, what do VC investors tend to look for? And I also have to be honest just about the venture market in general and the startup market. There's been a pretty hard, I wouldn't say a landing, but because public valuations came down a lot in early 2022, there's been a really, really big pullback generally in our market in terms of investing. And then there's also been a separate pullback in the crypto markets a bit that we can talk about later. But what we usually look for as a VC is we want markets that are either large or growing quickly and will become large. So that's kind of one of the basic screens. Like, how big can this become? Because we always want to think something can be very large. We tend to look for things where you have a really good team with some domain expertise. Mm-hmm. And so the interesting thing about crypto historically is, how do you find those people? Now you have a newer generation where there's more and more people who've spent time in that sector. But historically in the crypto sector, you've had a lot of people who are doing other things and just had their own personal interest in crypto. That's different. Actually, the investments we've made in crypto have been more finding teams that had some particular expertise and some deep background, mostly in the fintech markets.
So you just mentioned a lot of kind of green flags that you look for in terms of crypto fintech investing, which makes perfect sense. Are there any red flags or anything that gives you pause, especially in this very difficult environment?
I think our investments in the crypto space have tended to be more regulatorily sound, in some ways similar to Cboe Digital, which is regulated, CFTC regulated. I think recently you were approved for like margined futures, which is pretty neat because that's a great market. And so we, at least in our world, that's what our group like ours has generally looked for. And I think in the crypto space there's more and more of that bent towards people, just because of the way the regulatory environment has changed, making sure that, VCs in general don't like things that require, too much government oversight or too much regulation. And so now that there's a little bit more of a heavy hand on that front, people I think are going to be tending towards that, or, anything that is infrastructure related. If it's infrastructure related and you don't have to worry as much about the regulatory oversight, I think that's another area that people could spend time in.
That absolutely makes sense. I see a lot of relative similarities between crypto and cannabis. Are there any other kind of interesting, relatively risky sectors that Hyde Park Venture Partners are interested in or have invested in historically or even considered investment in?
That's a good question. I view almost every investment we make as being really risky, not necessarily a risky sector, but we tend to get involved literally when companies are, maybe it's 2 people, could be at most 5 people. So we get involved so early, it's all really risky. It's interesting when I think about things like cannabis and crypto. Some ways, some of the better investors in those spaces are these funds that are set up specifically to track a sector. And so there are cannabis funds, there are a bunch of crypto-focused funds. Some of those funds have moved to be AI-focused funds. We can talk about that too. But I think those groups tend to be kind of watching and looking. Whenever you have regulatory environments where there's some uncertainty, it's actually more important to have people who are even more specialized watching the regulatory oversight. Because folks like me, we don't want the additional risk of what's going to happen on the regulatory side. We don't mind if we know that there's a regulatory path, and so for one of the investments we made that was the Fair Exchange, we knew what the regulatory path was with the CFTC, but we're a little less excited if, the regulatory landscape is shifting.
That makes perfect sense. And I will say, I think unless you're in this space, it's very difficult to track all of the developments, domestic and overseas, that could impact a business on a day-to-day basis. So I think that makes sense that a lot of the venture that's considering investment in crypto is solely dedicated to blockchain-oriented investment, for example. That's very interesting. Another question I had for you more generally is, what do you predict surrounding the crypto M&A environment right now?
That's a good question. I might generalize it a bit to the overall M&A environment, and then we can get down to crypto.
Perfect.
And partially that's because how do VCs make their money? Well, we actually tend to make the most money when, and it's true for entrepreneurs as well, when the IPO markets are open and the public markets are really, really receptive to that. And that also happens to be when M&A activity, not when M&A activity is greater, but when you're going to get better prices in M&A. And so right now, because interest rates have gone up, so much, and the IPO market is, I wouldn't say completely closed, but mostly closed. I think we are hoping, and I would say most people are predicting that maybe that's going to loosen up by early next year. There's a lot of really good technology companies that are kind of waiting for the public markets to be open, and I actually think that will, that opens up a lot more M&A as well. There is a fair bit of M&A going on now, more like, kind of bottom feeding M&A, when big public companies know that other companies, the smaller companies can't go public. It's in some ways a little better time to feast on M&A, but the private equity sector's is step back a little bit, and so it's not a particularly good environment for that. I think on the crypto side, the fact that there's the both Bitcoin and Ether, the prices have stayed, I would say, really strong, particularly compared to at least things going on in the software tech market, and hopefully the regulatory environment's loosening up a little bit, because of the recent Ripple decision. Fingers crossed. I'm at least when you look at the stock prices of things like Coinbase and others, it feels like there's going to be a little bit of a letting up. But of course, there is the backdrop of FTX and Voyager and Celsius and BlockFi and all those things. It's like, when is it going to open up enough for people to feel like they can really make a lot of acquisitions? I think, the biggest acquirer in the space had been Coinbase, and they certainly had slowed down quite a bit, so.
Do you think some of the bottom feeder M&A activity is tied to the decline of special purpose acquisition companies or SPACs?
I think it is just the combination of that plus the public markets not being open for any type of public offering. So SPACs were certainly one market, and then you have a lot of these companies that lined up to go public in one way or another via SPAC or via IPO or a few cases via direct listing. But if the public markets are not open, you can't do that. But there are people like VCs like me who may have been invested in a company for a long time, and if things get too long, then you're kind of clamoring for, okay, well, when are we going to exit this, folks? And so you could get to the point where, yes, the fact that the SPAC market is down, there's no IPO market, and investors, the private investors may be putting pressure on the leadership team. Okay, now it's time to exit. So.
That makes perfect sense. I love your point about the stability of crypto asset pricing. Mm-hmm. I like to make that point to people all the time, that volatility is relative, and you have to look at the price of Netflix stock to know true volatility there.
Yeah.
But on that front, obviously I'm a little biased, but I'm very bullish on the prospect of crypto, specifically beyond, of course, fintech and AI, which is now kind of getting bunched into this conversation as you referenced. What's your feeling on the broader ecosystem? Are you, thinking about engaging with digital assets? Are you seeing that level of interest from institutional investors or investors?
I think there had been it's interesting. There was a movement towards bigger institutions like moving into this market a bit just before, FTX kind of ruined it for all of us, I would say. But just before, FTX and BlockFi and others, but there still is some, there's a little bit of movement. I think BlackRock in particular recently, announced they're still, allocating a bunch towards digital assets. I think the fact that Bitcoin is at 30,000 and the price of Bitcoin and Ether have, most people would say like remained really, really strong. The rest of the digital assets I think are, that's another story, but at least I think that gives people comfort. Mm-hmm. And so it feels like, look, the market's going to be around. It's really, really useful. It's an asset class. There's uses for it. So I think that continued stability, like, if the price of Bitcoin and the price of Ether were really low right now, to be honest with you, I'd be pretty worried about the market because you just have a lot of overhang. But look, it's something that works. It's something that people want, especially people in economies around the world have really important uses for the crypto. We'll call them currencies. There's other uses, things blockchain and others that I think. When in the venture world, we always look for combinations of technology that make for interesting things. And I think the combination of, AI with blockchain and AI with crypto and some of these things and, maybe even quantum computing that feels like it's starting to move a little bit, could make the whole ecosystem more interesting.
I love that. And you're absolutely right. The multitude of use cases is really compelling. I love to think about the supply chain implications or the property recording and mm-hmm. the use of blockchain in that context. You could root out expensive wine fraud by using blockchain to trace the bottles. I mean, that's just to scratch the surface. And I think there's some projects doing some really interesting policy work surrounding those many use cases.
Yeah, our firm has done a fair bit of investing in supply chain, not necessarily crypto related, but we've seen, blockchain uses in supply chain and other areas that are like, and those are, I mean, they're still the beginning markets, but mm-hmm. they're beginning to get embedded in some of those. And so I think, it's a little bit of a shame that some of that promise, given the little bit of the pullback in the market, that promise is like slowed down a bit, but it's still there. It's not going anywhere. So.
That's a great point. It's very early, mm-hmm. and it's often overshadowed by scandal or altcoins when really it's completely separate. It's a different animal than when you're talking about some of these random coins.
Yeah. I mean, it's one of the reasons why I actually think having a little bit more of a secure regulatory environment actually could be, will be good for crypto, and, having groups like Cboe Digital and, anyone else who is actually fully, really properties and exchanges and even brokerage firms that are fully regulated, where everybody gets the confidence of the system. Like, as that becomes more tried and true, I think you will see, I wouldn't even call it a comeback, but just a stabilizing force that will happen throughout the industry. And it'll, all these things will start being used on a more regular basis. So
you probably know this best as an academic, but I always say Bitcoin has all the attributes of a successful currency. If you look at kind of economics 101, the only thing that it's missing is a clear regulatory framework. So we'll get there.
Yeah.
We'll get there.
Yeah. I mean, the way I think of Bitcoin a little bit differently than maybe others, because I think, if I lived in Venezuela or I lived in, Venezuela is probably an extreme case, but many other countries around the world, even Turkey, mm-hmm. NATO member, any country where there tends to be volatility in asset, in asset prices and not certainty about the currency, I think there's really strong, compelling uses for, Bitcoin in particular, and Ether and others. In the U.S., I mean, there's trading activity and, there's some illegal activity. But I think here the use case isn't necessarily as strong. But of course, there's really good use cases for blockchain. There's also good use cases for, trading that goes on around the world. A lot of the companies that we're involved in do have, operations and things they buy and sell in other countries. And, it's just much more of a global economy than it used to be. And so I think there are these, good fundamental use cases, which means, it's here for good.
Yep.
So
borderless, frictionless, 24/7. And yes, you're absolutely right. Removing that centralized intermediary that has the ability to affect a currency is very compelling. Venezuela, Turkey, but even if you look at Switzerland, I think 6 or 7 years ago when the Swiss finance minister said, we're not going to pull the peg, and then he pulled the peg.
Yeah.
So that's always an interesting use case from, people who are really supportive of some of crypto's purest tenets, I would say.
Yeah, I think when I think about it as an academic, I think in some ways, the more stability in the prices of Bitcoin and Ether, the better, where, it's not as volatile and it's trading more like most currencies would trade. And I think it feels like it's getting there more and more now. Like there is, a lot more stability in it than there was historically. I'm not an active trader of Bitcoin or Ether. I bought some or sold some in the past just to kind of dabble with it. But because of that, I don't know the kind of the ins and outs of all of that. But I do watch the prices, and I'm like, well, the price seems like it's had quite a bit of stability for a while. So and not, it's not going in the wrong direction. It's going in the right direction.
I think you're absolutely right. One question that I would love to close with is whether you have any predictions. It's a question we love to ask everybody on Cboe Digital TV, whether you have any thoughts or what's your wildest prediction for crypto in particular, but also the broader market that could affect crypto in the next 6, 12, 18 months.
I mean, I think on the crypto side, I think the regulatory environment seems like it's I don't know what to predict there, but it feels like the SEC and to some extent the CFTC is just not going to let up because they, it's not their fault, but maybe it looks like they've got egg on their face because of what happened with some of these properties. So I think, I just think that, my prediction would be like, that's going to take another, probably 12 to 18 months to just solidify, like, what is it going to look like? Are, groups like Coinbase going to really come into, is there going to be a new regulatory environment? Probably not. Are groups like Coinbase and others going to be able to come into compliance the way that Cboe Digital and others are really in compliance with the regulatory environment? I think that's just the thing that I'm watching. I wouldn't say that I have a prediction on it, but I think my basic prediction is, these bankruptcies have given the SEC and the CFTC a license to really, continue to push whatever agenda they might have related to regulation of the crypto world, and we're just all going to have to go along with that until there's some final reckoning from it. So, and then I would say the broader market, at least in the venture market and the investing market, we are looking a lot at interest rates and when that environment's going to change, because it seems to be, an environment where I guess I was kind of hoping personally and for my investing stuff that the Fed would decide, okay, not only to pause, but to start signaling that they're starting to pull back. And I think we don't really see that yet. And so that feels like it will probably change over the next 6 to 9 months. And so once they do the first downtick, like before they do, or once they start signaling they're really going to start pulling interest rates back, I think it'll be off to the races again. So,
well, thank you so much, Ira. And thank you so much for joining us. We look forward to seeing you on our next episode of Cboe Digital TV.